Big Canadian banks are reporting this week. The Bank of Montreal, Scotiabank were first up before the bell, and both beat expectations. For a money manager's take on the results, let's bring in Garnet Anderson, Vice President, Head of Portfolio Management at Tacita Capital. Thanks for coming in.
Thank you.
Let's start with BMO. Its EPS was $3.04, well above expectations. I'm wondering where they saw gains.
Well, they saw gains actually throughout, from net interest, capital market activity, blew it out of the park. And their wealth management group did very well. So it was pretty well uniform all the way across. The big news is really almost what they did on the loan provisions. And they've been coming off a string of disappointments, almost going back 2 years in terms of not coming up to consensus. A lot was digestion of a past acquisition, loan loss provisions. So that normalized a little bit. Now, normalization today means with the caveat, because they've got their non-performing loans and you've got the performing loans, but you still take a provision against it. And you have to think, well, what do their economic models suggest that the ultimate write-offs will be there? And then you can't help but then leapfrog over to tariff talk. So if you kind of, do a word search in BMO's transcript, tariff was mentioned, I think it was 21 times.
Well, how do you gauge exactly how your losses or what your losses are going to look like, given the constant tariff threat and the changing tariff threat and the deadlines that seem to be scattered all over the place?
Well, exactly. And I think a positive, and it might not be a permanent positive, but a positive was, I don't think they got antsy. I don't think got premature in terms of saying, oh, my goodness gracious, these tariffs are coming, they're announced. We're going to have a really bad economic scenario, and let's factor those in. I think it was a little bit of a caution, a little nudge here to recognize that this is coming down the pipeline, one shape, form of the other. And so I thought that that was a positive. I think the other thing that came through, so if we would contrast BMO versus Bank of Nova Scotia, is BMO's got a lot larger of a U.S. representation. And we saw out of the U.S. banks, they were having good performance stateside. Optimism is up there, not so much down here.
Yeah.
And again, you read through the transcripts, and they're already talking to the bank customers, the commercial customers, who are already starting to kind of pull back, wait for decisions to come out. And what that will do could slow down, loan growth. So we'll have to see how that permeates through. And then obviously, if there are tariffs that really do hit and stick, that's going to rifle through, their loan loss provisions.
So their American purchase, the California bank they bought in 2023, will be helpful to them?
It's a suggestion that it's kind of turning the corner. I mean, there was a lot of digestion that went on there. But it was, a decent-sized acquisition, brought in lots of new assets, lots of new branches, lots of new customers, over 1 million customers. So I think you kind of shorter-term pain might have lasted a little bit longer than shorter-term for longer-term gain. So I think now if you're sitting back and you knew then what you know now, you'd be happy with that acquisition because now you've got a bigger footprint in the States. And obviously BMO had Harris going back, was one of the first ones to go into the States back a couple decades ago, what have you.
Okay, let's go to Scotiabank then, because they beat expectations as well, but they didn't really get a pop in the stock today. They actually fell a little last time I checked. So what happened there?
Well, the same sort of thing. They didn't get quite the same pop on their wealth side that Bank of Montreal did. Didn't get the same pop on the net interest income that BMO had gotten. And Bank of Montreal was a little bit of a turnaround situation, maybe, whereas Bank of Nova Scotia was almost more of the same. And they also don't get the U.S. pop. They're, 7% of their revenues come out of the States. They're more Caribbean, South American. They're doing some reorganizations down there. They took that $1.2 billion write-off there. So I think that was enough to go, okay, decent quarter, but a stock price doesn't always reward just a decent quarter.
I was going to ask you, remind us why they sold off. They sold off Colombia, Costa Rica, and Panama. Right.
I think they were looking for efficiencies, and they're rolling that into a new venture, more scale. And my sense of it was they were able to take, or they will be able to take a little bit of an active management step back, which might not be a bad thing. Take some of that capital and focus and bring it more towards North America.
Okay, TD, coming out on Thursday morning, I guess. They've got a new CEO, and that is being very well received, it seems?
I would say somebody of action. Now, it certainly takes more than the CEO to kind of pull off a divestiture and such. But I think a positive there. I think I will be parsing through the release just to see any commentary around the run-on effect of the anti-money laundering issue in terms of...
Which was a big hit.
Well, the penalty was a big hit, but then the capping of the growth.
Yes.
And so what will that mean? So if you contrast that to, say, for example, Royal, that could go and grow more in the US if it's so desired to, TD might not have that same flexibility until they dot some I's and cross some T's and make some regulators happy.
Parse that out a little bit more for me, because some are saying the fact that there's less US exposure is actually going to be a good thing for them in the near run.
Well, right now, if we take a look at economic growth, and let's kind of equate that unfairly and simplistically to loan growth, I think you'd rather be banking in the States than you would in Canada right now. So I think you get that from there. And then even if it's just a matter of you're taking US growth, we've got our FX rate, you're bringing those over into Canadian dollars. The Canadian dollar has been sinking. I mean, it's stabilized a little bit, but we'll see where that goes. So they got a little plump up from the currency effect as well. And if there really is a move stateside to financial deregulation, does that improve their efficiencies, help them with their expenses? And Canada will have to catch up on the regulatory front regardless. We have to make sure that our financial institutions can compete globally.
Okay, let's quickly get to Royal Bank because they're expected to report as well.
Yes, I mean, they're again, with their U.S. presence, you expect you're going to see some of that BMO effect without the turnaround tailwind. And so you would expect to see, with interest rates having come down, their spread on their loans should have improved. I would tend to think that today, the two banks today set the tone for the whole tariff loan loss provision motif, if you will. So would be surprised if Royal came out and all of a sudden they're coming out at 90 basis points and the others were coming out around 60 basis points in terms of those provisions. So I think we'll see more of a stable picture on that front, but consistent. Because again, to your earlier question, there's still a lot of unknowns on that front. So I don't think you want to deke too far left or do too far right.
Yeah, almost like everybody's waiting and waiting to find out what happens perhaps next week as a first blow. Garnet Anderson, thanks for coming in. Appreciate that.
Thank you.